podcast. I'm Cameron Christensen, along with our co-host, Anthony Faso. We just wrapped up our interview with Sarah Sullivan of SuGo Capital. And I'll tell you what, guys, in addition to this interview, we are also having a 1-hour webinar where Sarah is going to go into the 15 different types of real estate investments, and she's going to be covering kind of startup capital, the amount of risk that's associated with each one, and just different opportunities. So make sure you mark your calendars. We'll also have an invite in the show notes as well. Anthony, in addition to that, what were some of your takeaways from this conversation with Sarah?
Well, I wrote down a few notes as she was sharing, but a couple things that stood out to me was, one, she said, if you want to be successful, just do what successful people do, right? It doesn't sound that hard, but how often are we're getting advice from people who are losing money, who are unsuccessful. And sometimes they create that scarcity mindset and put fear, and it allows us to, we don't want to make, or rarely do we make good decisions out of fear. Okay. And also, I knew there were different types of real estate, but 15, I thought was pretty thorough. So again, I'm looking forward to learning more about that on March 5th at 12 o'clock Pacific. What were some things that stood out for you, Cam?
Sarah had one of the best quotes I've heard in a really long time. It was when she was frustrated, she put herself in control of her income. I love that idea of just kind of taking ownership of what's wrong in your life or what you're not happy with. And so I really enjoyed that. But I think the reason that I'm a big fan of Sarah is because she approaches real estate the same way that you and I approach infinite banking, is really through education. And so her approach and what she's going to share with us in the webinar that we referred to is what she wishes she would have known when she got started. And that is exactly what our approach is education, and saying, man, Anthony and I spent a lot of time and money into understanding infinite banking. And that's what we're doing when we meet with people, is we're saying, hey, listen, I'm just going to educate you. You're going to make your own decision, but I'm going to give you everything I wish I would have known when I first got started. And so I think that's why we're such big fans of her.
Perfect.
Awesome. Make sure you mark your calendars, March 5th, 12 o'clock Pacific, and I think you guys will enjoy this episode.
Take care.
Sarah, thank you so much for joining us today. We are excited to have you on. If you could, we know a lot about you, but our listeners don't. Could you maybe start with your story and how you got into real estate originally?
Yeah, definitely. Thank you for being here. And thanks, listeners, for listening. I love talking about investing. I love talking about money. So it's super jazzed to be here. Good. I think it should be a more common conversation topic.
Right? Absolutely. Should be taught in schools.
Yes, exactly. So this is what I'm passionate about. So a little bit about me. I started out going through the traditional path of get a good education, go to a great school, get a great job. And so I did that, and I started earning some money, and I was like, well, I want to earn a lot more money. Let me go get my MBA, get more education, get more certifications. Earned some more money. And then I up-leveled my lifestyle, and I realized I'm still not this is going to just keep going and going, where there's no end in sight until I'm 65, unless I shift something. So I was earning great money, but I was spending great money. And I had a family, and I said, okay, let me look around me. Those people who are really wealthy, what are they doing? And you guys know this, study what the wealthy people are doing. Study the people who are where you want to be. Don't listen to the people who are not where you want to be.
Great advice.
Yes. So started studying that, and everyone was in real estate that I talked to. So I started studying real estate, and I just went nuts. I got, all the courses out there, how to fix and flip, how to do wholesale, single family home rentals, how to find your market, how to syndicate commercial, resident retail apartments, everything. And I was still in corporate, doing my corporate job. Worked at UCSF, worked at Sony, worked at tech startups, still advancing my career. And I was trying to get into all this investing, and it seemed like so much work. And then one day I learned about apartment syndicating, and that blew me away. And if you don't know what it is, look it up. It's amazing. And well, lots of kinds of real estate investing are amazing. But for me, this one felt very, very steady, very reliable, very recession proof, diversified in risk because it was large. And so I started getting into that as a passive investor. And then I started referring family and friends like, hey, you guys, look at this kind of investing. And they got excited about it. And then I realized I could build a business around this. I don't need to work in corporate. I can work full-time in real estate, what I'm passionate about. And so I recently shifted into full-time working in real estate. And I absolutely love it because it not only, on the scale that I'm at, it's not only transforming my life and my family's life, it's transforming all of our investors' lives. It's transforming their trajectory of their retirement, of their family wealth building. So it's super rewarding and I love it. So that's me.
Well, I'm this is a little off topic, but so now you're not in the corporate grind, right? Now, how does that feel mentally, right? Because you don't have to go to, particularly now. And I mean, there was a lot of layoffs this year, and now you have more time freedom to spend with the family. How has that been different as far as the quality or the enjoyment of your time compared to working, probably 50, 60 hours a week?
It is amazing. It's incredible. And the thing that I'm having to watch out with though, is I also love this business I've built. So sometimes I do let it creep into family time and then I have to rein it back. So the biggest thing, there's two biggest things to me. One is now I am in control of my income. Whereas at a corporate job, if I wanted to make more money, I had to get a raise, I had to get a bonus, I had to go get a new job. But now if I want to make more money, I just buy another piece of real estate. And so I feel very peaceful about my financial future and my family's financial future. And then as far as time with my family, I have a 5-year-old and 7-year-old girl. And
Congratulations.
Thank you. And I've created my schedule that I'll take 1 week off per month. And I take Wednesdays as half days. And that's time that I can be with them. I'm with them in the morning before school. I can pick them up after school. Before it was like, they had the after school care and we'd barely get home in time to make a really quick dinner and put them to bed. And that just, it would bring me to tears. It made me, they always wanted more mommy time. And it was like, there was never enough for me to give. And now they're kind of sick of me. They're like, just go play with their toys.
Now they got too much of you. Like,
yeah.
I love the 1 week off a month. That is phenomenal. Is there, do you have certain times, certain things you do throughout the week, or are you just kind of hanging out and taking them to school and bringing them home?
Well, I have a lot of hobbies. So incorporating paddleboarding, we live on the San Francisco Bay. So it's just like a mile to go down the hill, go paddleboarding. Hiking is right out. You guys can't see this amazing view I have, but view of the bay, I can go hiking on Mount Tam. Is just like, there's so many great things to do. One of my 2021 goals is to make sure that me and my husband have a spa day once a month. So incorporating that in. Yeah, it's a good life.
How about, again, I'll kind of go off topic here. We're talking about kids. Have you started to incorporate conversations about money or how to create wealth with your kids yet?
Well, the 5-year-old, totally not interested at all. The 7-year-old, yes. So she loves buying things and she loves owning things and she always wants to acquire more things. The 5-year-old, she's like, I don't need a thing, whatever. Yeah. And so, we definitely started, if you want to buy this thing, you need $10 to buy this toy. How can you earn $10? Just the concept of, she's 7, so it's really light, but the concept that you want more things, you need to earn more money. And that's how it works.
Very cool. Awesome. Then let's kind of dive back into it. You said that you're in syndications now. Is that where you started? We talked to a lot of people and usually they kind of jump around until they find their niche. What have you done in the past?
Yeah. So invested in hotels, started out in single family homes. And I think that's where a lot of people start out because it's very, I don't want to say you don't have to know very much, but you don't have to know very much. You can just decide one day, I want to buy a rental home, and you can look on Redfin and you find it and the numbers work and you buy it, you get a loan, just because of your income. So it's quite simple. So a lot of people do start there. And that's where I started. And I bought something that was, amazing on paper. The tenants in that first duplex that we bought, they just killed the place, and we ended up losing money on it, and I got really burned. And so for me, I pulled back from that strategy, trying to think about what's something where there's economies of scale, where I won't have that risk. If a tenant doesn't pay and we need to evict them and then they trash the place, like that all was money straight out of my pocket. And there was no diversifying that risk. There was no sheltering that risk because it was just 2 doors. So the model that I jumped to then was the apartments, where it's the same idea. You have tenants that are renting, but at 100 doors, you have 10 people who are less desirable tenants. It's in your business plan. The other 90 tenants are good. You still make a profit. And so something that I like to talk to people about who are single family home rental owners is take a look at, if it's going well, because sometimes they go well, sometimes they don't. If they're going well, a lot of times people say, well, I bought it for 100, I'm renting it for this, I'm getting 10% return, it's great. However, if you take a look at it and say maybe it's now worth 200, what you're making over 200, is that still the same rate of return? And if not, is there something you can do to leverage that single family home and put that money into a passive investment still in real estate? So you're not doubling your work by maybe buying another single family home rental, but you're putting into something that can be passively earning income for you. Often ask people to take a look at it like that. So there's a lot of things you can do to have your asset work double time, much like, some of the insurance vehicles that you can set up, like what you guys do some of, so that, that's something that you can leverage in order to reinvest, and then your asset is working double time.
Perfect.
Awesome.
So we've talked about single family and syndications, and one thing we're going to dive deeper in the webinar is 15 different types, which sounds like a lot. Would you mind briefly describing them for our listeners?
Yes, definitely. Because I wish that someone just did like an overview for me, because, there's all these gurus that have coaching and programs to learn how to do what they do in real estate. And I took them all because I didn't have a good idea of what each one looked like. And so then after I went through all that, I said, okay, here's 15 different types. And I want people to see just in a spreadsheet how they all compare, because you don't realize they all have a really big difference in level of effort. So like flipping a house is a totally different level of effort than investing in a syndication. The money you need to get started, the hold period, the returns that you can make, that's huge. Like seeing across all these different types of investments, what is like the average typical return that you can make in all of them? I think that's huge. I wish someone had showed that to me. And so I could have just picked knowing all this, the level of effort, the money it takes, the hold period, the liquidity, the risk, the returns, then I probably would have gone straight to what I'm in, because it was a perfect fit for me. So I love showing it to people so that they can kind of see, of all these 15 different types, which fits best for me, my portfolio, my investment strategy. Are you 20? Are you 80? You're going to choose a different one. It's totally not one size fits all when it comes to real estate investing. And also a lot of people don't know that there are those 15 different types, like passively investing in hotels, passively investing in apartments, passively investing in retail parks, in mobile homes. There's a lot out there, right?
Perfect.
Absolutely. Yeah, I couldn't agree more. And a lot of times we talk about real estate as a great opportunity to create wealth. And man, you always get those conversations. Well, I know so-and-so that had a rental property, had a terrible experience with it. And so I'm looking forward to this conversation, because what I think it's going to do is it's going to broaden everybody's vision of what real estate is, real estate is so big that there are all these little niches inside of it. And so I look forward to kind of summarizing that for our listeners and saying, hey, if you have some money on hand that you want to put to work, this is for you. If you have more time than money, then this is going to be for you. So I look forward to it.
Yeah, and I think a cool thing too is that there's, like you said, there's so many little niches and different ways to invest, and they're not always all good at the same time. So when people say like, oh, the real estate market is going to crash, these 15 different types of real estate do not follow the same cycles. So it might not be a good time to buy a single family home, but it might be a great time to buy some land or storage units. And so they all have different cycles. And so that's also good to educate yourself on, so that you know roughly like, okay, when someone says the real estate market's going to crash, that is a grotesque statement, because there's all different kinds of real estate and each market is different. So I also love training people on how to choose a market to invest in. I live in San Francisco. I do not invest in San Francisco. I choose different markets based on really key things, because San Francisco properties don't cash flow. I like cash flow. So I'm buying in certain cities in Texas and South Carolina. So how to choose where you buy is really important, no matter what kind of real estate asset it is. That's really a key piece too.
When you're looking at a market, I mean, there's some point to look at price points and what it could be rented for, but what are some other things that are outside of maybe the actual property, but more focuses on the area? Can you share with some of the things that you look for?
Yeah, very, very good question. So when we look to invest, first we choose the market. So I'll tell you the things that we look at, and we choose the market, like the city and the surrounding area. We choose that first. And then we look for properties in that area that are going to be cash flowing. So how do I choose that market? So, every city has a different level of unemployment, different level of job growth, a different demographics around people. And so we look at demographics, like what age bracket are most of the people. And if you're buying apartments, you want people who are in the renter age bracket, a lot of people in that renter age bracket. So, the 18 to young 30s, if you have a lot of people in that age bracket, it's gonna be high demand for apartments. You want to look at the job growth rate in the US. So say it's, 1%. Look for a market that's got 2% or higher job growth for the last 2 years, and the projection is higher than that for the next 5 years, because that tells you that where the jobs are, that's where people move to, right? So you want to own apartments in the cities where people are moving for a job, because usually when people first move for a job, they're renting. They don't have if it's a new job, they don't have the credit yet. They don't have their down payment. So they're going to come in and rent for a few years. So looking for those job announcements, that job growth, and how it compares to the national level, that's going to tell you how the human migration trends are going to go. You can also look at vacancy rates. And there's websites and different property management companies you can ask about this. And that's going to tell you supply and demand. So even though people might be moving to a particular city, if there are way too many apartments, you still might have a huge occupancy, a huge vacancy rate in that city. And so you want to be comparing what's going on in the city and on that supply and demand of, where people are going to live and how many people are coming in. Important as well. And there's a lot of other things, but it's a lot around the job statistics. There's lots of websites that'll give you that information, and the population statistics around demographics and also growth. Another thing that's important to look at is the household growth. So that's different from population, because just because I'm having 8 kids and everyone else is having 8 kids, you might be just living in the same place. But if the household growth is there's more people who are in that renter age bracket, you're going to have more renters. So the household growth is even more important than the population growth.
I've never heard of looking at that stat, household growth. Interesting. Well, good.
Very important.
Perfect.
Yeah.
So I find curious kind of your trajectory in real estate is you got interested or got started just for you personally. And now you've kind of become a resource or almost a teacher for a lot of people. So if someone were to reach out to you, in addition to kind of the 15 different types of real estate overview, what else do you provide for them?
Yeah, so I love, super passionate about training individuals on how to find safe, reliable, predictable investments. And so that includes doing due diligence on people and the team that you're going to invest with if you're choosing a passive investment. I have lots of training on what I just mentioned, like how to find a market that you want to invest in. And it'll depend on if you're investing for appreciation or cash flow. And so I have a lot of training on that. So I have weekly webinars where I give these trainings to people who are on my email list. I just love helping people think about leverage as well. So I have trainings around how to leverage your assets in order to make them work double time. And I love doing that. So yeah, if people reach out, I have a couple ways that I work with people. One is just boom, put you on my investor list. You can see all the good things we have to offer. Another one where it's you just get training and how to learn as much as you want to learn before you make an investment, I think is super critical. If you just jump in and you don't know enough, you don't know who you're investing with or where you're investing or what you're buying, that's when mistakes happen. Mm-hmm. That's when, all those, like you mentioned, Cameron, like, oh, I heard someone that had this big, they lost all this money in real estate. Well, it's because they chose the wrong team. They got involved with fraud. They misjudged the market. So they bought somewhere and the market crashed. Or they chose a poor property management company. So the property didn't perform well despite all those other things. So I love giving extensive training on that so that people are really informed before they take action and invest their retirement. Also love to show people how the taxes work. There's a lot of tax favorable things with real estate, and that helps some people. Some people don't need it. So talking through, a lot of my trainings talk through the tax advantages as well. And, how you can use your retirement funds to invest in real estate. Your IRAs and your 401ks can invest in real estate. So I have trainings on that. So yeah, there's a lot. If you guys are interested, you can go to my website, SuGoCapital.com, and put in your email address, and I'll put you on these lists to get more information about all of that.
Would you mind saying your web address one more time?
Really fast.
Little slower for Anthony.
SuGoCapital.com. Yeah, thank you for that. SuGoCapital.com. It's SuGo capital.com.
And
okay.
We are huge fans of you because of the resources, the education that you provide. And like we've kind of alluded to is, man, we're going to have you back and we want to hear more about those 15 different types of real estate and kind of give our listeners kind of that snapshot. So I'm excited for it.
Yeah.
Yeah. I love giving that webinar and that training because it opens people's eyes and it usually changes the decision they were going to make. And they're really excited to change and make a different decision, one that fits their situation better than what they might have known about before.
Awesome. Look forward to it.
Awesome. Well, yeah, we're looking forward to the webinar and learning more about the 15 different types of real estate. There will be a link in the show notes to attend that webinar. And if you just happen to miss it, a recording of that will be in our course, the infinitewealthcourse.com. So, Sarah, thanks again for coming and looking forward to the webinar.
I am super looking forward to the webinar. I hope I see all you guys there. It's going to be really, I think your mind is going to be blown. You're going to be like, what? I didn't know about all these options. That's usually the feedback that I get. So come on, hop in. We'll see you guys there.
Awesome. Thanks, Sarah.
Make it a fantastic day.
Take care.